In today's video, I want to chat to you guys about financial planning and the role that it plays when you're busy planning to start a business. Remember that I'm busy with the free mentoring course. We're busy still with the first phase, and this is basically the 7th section in the first phase of this business mentoring course. And in this phase, obviously in this section, we're going to be talking all about financial planning. Remember, so far we were talking about business ideas, how to generate business ideas. Then we're talking about testing business ideas. We're talking how to define a target market. We looked at a little bit of competitive research. We talked about vision. The previous video, I talked about the SWOT analysis. And then this video, we're going to start looking at the financial planning section of the video. So just remember, once again, just to give the video a like, remember to hit subscribe, and then let me head onto my computer. Then I can explain to you a little bit. We're not going to go too deep into the financial planning part of it, but I want to show you guys just one or two basic concepts about financial planning, which is really, really important when you're starting a business. So let me head onto my computer, and I can show you what this is about. Yes, so the financial planning template, I think, is really important. Like I said, all these documents, and you'll see that in the description of the video, there's a link to a web page, and on that web page, you can go and download all these documents that I'm busy looking at now on the YouTube video as well. Like I said, all the documents are there, so you can go download this. It's in a Word format, so you can save it on your computer, and then you can type and complete it as you go. That is the purpose of this, is to give you guys a little bit of a roadmap, just a way to do the proper planning when you're thinking of starting up a business. Yeah, so I think the financial planning template, so I think the thing is, I just want you to think about different types of costs that you're going to incur when you start a business. A lot of people think, no, I'm going to start a coffee shop, or I'm going to do this and do that, but they don't always think about the startup cost. So there's obviously a couple of things. I just jotted down 3 different things. Just equipment. What equipment do you need to buy? So if you're starting any form of a restaurant or anything like that, what is the physical equipment that you need? I think marketing is also really important. You don't want to spend a lot of money buying equipment and setting up a shop and open it up and then there's nobody there. So you need to definitely think about initially what type of marketing you're going to be investing in when you're starting up that business. And then obviously legal fees. So I think that is important. And I think there's a long list of different things. And this is where you also need to just stop and just think about the expenses that you need to incur when you're starting up their business, because sometimes people underestimate this phase, and when they start with the planning, or when they start setting up the business to start, and all of a sudden they end up running out of money. So I would rather take a bit longer in the financial planning things, and maybe speak to an accountant and see if you run past it and make sure that you covered all the bases, and just make double sure about these things, especially startup cost. And the legal fees is a very interesting thing, and I think it might be worth touching on it here as well. A lot of people think that when they go into a business, I've done a whole complete video there on different business structures that you can use, sole proprietors versus companies. So you can go check out that video if you want. And then just when it comes to partnerships, if you're going into business with somebody else, the legal aspect of it is really, really important. When you go into partnership with somebody else, you get a thing which they call a shareholders agreement that you need to sign. And a lot of people think, no, I can't afford to pay 5,000 Rand or 10,000 Rand to have it drafted professionally. So then they don't do it. And then the problem that you've got is, like 5 years or 2 years down the line, that partner changes his opinion of how business is supposed to run. And all of a sudden you don't have a roadmap of how to deal with those type of things. I always say that a partnership agreement is like signing a divorce agreement before you actually get married. So if something goes wrong and one of the partners do decide that they want to pull out of that partnership, then they take that document out of the drawer, and that thing gives them a roadmap of what the procedure must be when somebody does decide to resign out of a business, or if you want to change your shareholding structure or anything like that. So it's really, really important to make sure that you definitely consult with a lawyer. And then also, obviously, just get an accountant on board. I think that's really, really important. Some of you guys can go put the list in your other stuff. So the total startup cost, if it's 200,000 Rand or 300,000 Rand, so that you know what that fee is that you're busy looking at. And even just buying stock, if it's something that you're going to be buying and selling stuff. My son quite recently was busy designing quite a big website, and we just don't know, it's just something small. And when we started adding up the cost of how much money we need just to buy the minimum amount of stock for him to operate that website, then it turns out it was like 300,000-400,000 Rand. So people think, oh no, I've got this brilliant idea, but they forget about what that initial startup cost would be to get a project off the ground. Revenue projections. So this is also just as important. Estimate how much revenue your business will generate over the next 12 months. So month 1, month 2, month 3. And it's always nice to use an Excel spreadsheet. On that spreadsheet over there, you say first month, this is going to be my cost. This is the stock that I have to buy, the equipment that I have to lay out, and then total that column of what it's going to be in month 1, and then month 2. Once you start operating, you put your income at the top. I say this month I expect 50,000 rands worth of turnover. And then in the next video, we're actually going to be looking at a break-even analysis. So if you go check out that one, that's going to be a spreadsheet. And then we can analyze these things a little bit more to do that calculations to see how much you actually need to break even when you start your business. So that's just the revenue projections. It's important to get the total revenue, and I think expenses as well. Like I said, I've only got like 4 different things here. Obviously, you have to look at rent, you have to look at salaries, your inventory, your utilities. I mean, the list is ongoing. You have to think about internet, insurance, all that type of stuff. But like I said, on the spreadsheet, I'm going to give you guys a nice template on the break-even analysis that we're going to do of a long list of different things that you must think about when it comes to the expenses. But for now, it's just important with the financial planning that you start getting the totals of these things together. So at least you know what to expect, how much you need to, how much money you need to get going. Cash flow forecast. Plan how much cash flow will come in and out of your business. So total cash flows from sales and investments, and the total cash outflows from expenses, taxes, and buying all the initial stuff and setting up the shop and stuff. So projected net cash flow. And then the break-even calculation. And like I said, in the next video, we're going to dive a bit deeper into that. We're going to look at the spreadsheet that I'm going to give you with a couple of tabs where you can do a couple of calculations on the break-even analysis. So just a couple of things. You obviously have to look at your fixed cost to say what is your fixed cost on a monthly basis, what is your salaries, what is your rent. So all the stuff that is not linked to the physical operations of the business. Then your variable cost is a thing that varies depending on how much you sell. So if you buying and selling watches, then obviously what is going to be the cost price, what's going to be the selling price, and then we're going to look at that break-even point in the next spreadsheet that we were talking about. The next step is how would you monitor and adjust your financial plan. And I think, once you get the big picture, once you have all the totals together, then you can start analyzing that to see what do you need to adjust, what can you do more, what can you take away, what is too much, what is too little. Because I think the planning phase, that is really, really important. I think I do recall over the years helping a couple of people. And I remember there was one incident of a guy, I think he worked something like on a mine or something like that, and he decided that he wanted to start his own business when he got retrenched. And I think I'm probably talking back like 2010, 2009, somewhere there. This guy got a package, I think it was about R1 million, and this guy was just burning money. I think within probably about a year, that R1 million was gone, and he had nothing to show for it. So if you look at this bank statement, he was just spending money, buying stuff, buying equipment, all stuff that's not really relevant to what he was busy doing. So I think it's really important to look at these projections, make a decision on what it is that you're going to be spending initially on your business, and stick to that plan. Because if you deviate from that plan, you can run out of money. And that is also what we're going to look at a little bit in the next video for the break-even analysis. Thanks for watching. Keep your eye out for the next video. See you guys soon.